Hey guys, just a quick daily market update for you. If you're liking our content and these short videos, please give us a like and subscribe. And also, if you're liking our content and you're tuning back in, maybe you want to check out our free course. That's right, we're doing a free course for everyone in our Facebook group, which is Crypto Paradox. If you want to join the Facebook group or attend our free course, there will be links in the comment section below. All right, to the markets. Bitcoin, what happened? If you're in any of the groups that I post in, last night I put out a post when Bitcoin was above this weekly high here, right? This level starts from the weekly close high. And I was talking about the potential for this to end up reversing on us because we're starting to put a little bit of a wick up here. And probably the more important thing is that PPI actually came out high. And so PPI is sort of like business inflation. It means basically that businesses are having to spend more money to acquire the products that they need to run their business or create the products that they're making, right? So basically we had CPI come out and it was hot. Then we had PPI that was come out and it was hot. So CPI, we didn't dump, the market didn't really react to it that much. I think it was maybe this day or this day. And we ended up having a rally the next day or two after, and the market pushed quite aggressively on ES. The CPI day ended up being a bit of a nothing burger. Not too much happened. But then last night when PPI came out, we actually dumped off quite aggressively, and we're having a little bit of a trend break here. So that is actually something to keep our eyes on. So basically you can see here in the consolidation, now these pink boxes that I've got in here, they're the weekly opening gaps, and they're really key, quite important levels in the chart, right? And you can see price, I wanted to see price hold above here, but basically this was the hourly through here that the PPI report came out and the market dumped off pretty aggressively. Going low time frames, I'll just show you the precision of these setups sometimes. And we got the double top perfectly, pretty much to the tick, to the weekly opening gap level, right? So we got the double top off the weekly opening gap, and then that's ended up rolling over quite aggressively and dragged Bitcoin down with it. So I saw that happening. I put out the report to everybody that, to be careful because this could end up looking pretty nasty, right? And also the other thing as well is we had this really big bearish divergence getting put in. So basically now what we've done is we've put in a bearish divergence swing failure pattern of the range high of this entire accumulation range that's been going on since June last year. So, we're pushing up to, 244 days, right? We're pushing into, getting towards a year that we're in this, well, it's still a fair way off a year, but, we're probably pushing 9 months, right? But, potentially this ends up taking an entire year to get out of this accumulation range, right? So we came up and we put in an SFP of this range high, and that's when I put out the report. And yeah, this morning, basically when that rolled over one more time, the rejection at the end of the New York time zone, we had a really big sell-off, right? And of course, that's upset all the altcoin markets and everything like that. Now, I'm pretty risk off at the moment because I don't know where this is going to go, but to me, it's giving me a pretty strong signal that this wants to have a swing low. Now, I've got the Bob Loukas 60-day market cycle mapped out here on 60 days from the low. So 70 days from that point there. So he's measuring at the moment from this pin bar. He's saying that this is where the low is. And so then you've got basically 60 days to that point there where the low should be. So expecting a little bit more of a pullback here. To stay bullish, I think we need to hold above this weekly level, which is pretty much 2,900, right? And multiple areas of support in there that we came down into recently. So if we can come back into that area and we can hold, then yes, there is potential. Maybe we get another 4-hour bullish divergence, and then we push again up from there, and it just ends up being a big flag pattern, right? I think what's probably more likely is this moves into a downtrend like this, and we pull all the way back to our range low of about 19K, right? And this could eventually maybe even, do something like this, and then we get, the falling wedge type setup through here like that. And then we get the breakout and push later on in the year. That is definitely potential we can't ignore. So I think if we come down we break through this 21 level, if we can't hold support there again, then I'm going to be looking for that 19K level. If 19K can't hold, which I'd be surprised if it didn't, something definitely would have to be going wrong with unemployment rates and stuff like that, and the stock market be having quite a strong pullback. Then, you know, we can look at the top of this smaller accumulation range, you know, at 17,700, and, you know, potential double bottom range somewhere around, you know, 15, 16K, right? This yellow line that I've got through here, that is the next FOMC date, which is pretty much a month away, right? So the reason why I have that in there is because PPI came out hotter than expected, and also so did CPI, there was some pressure from 2 of the Federal Reserve board members to actually raise 50 basis points instead of 25. Now, because, you know, we've come out with inflation, looks like it's actually starting to become a little bit sticky. And in my opinion, just from looking at the stock market and a lot of stocks, like, we've been up only pretty much on the stock market since October, right? It's been a really strong bear market rally. And now look at the weekly that we're putting in here, guys. A key level of resistance, and we're putting in a shooting star reversal. And I don't know, it just looks horrifically ugly. Usually Friday is the high or low of the week, and especially after a bearish news event, I'm expecting Friday to be a runner in the New York Times timeframe, and we close even further down here. And the ultimate low of the week will be put in on the Friday, right? So it's going to be interesting to see how this closes. But the most important thing, in my opinion, is this chart here, which is the E-mini chart, ES1. The break of this uptrend through here. And how deep do we pull back after that uptrend is broken? We're breaking the market structure here that was holding as support of basically this daily order block through here, right? So if New York ends up selling off, this is going to look really ugly. And the next, well, trend support, we can go from the lows through here, and maybe we come back down to this area here, or all the way down back to the middle of this range, which is about 39.19. Now, if things get really bad and, you know, the Fed starts talking about, okay, inflation is actually looking a bit stickier than we expected, and they end up coming out and raising at a higher rate, we're going to start to see things like yields, which are already pushing out of a really big falling wedge. If these start to make new highs, right? If these start to make new highs, then I don't know. For risk assets, I just find it really hard to believe that they're going to keep on pumping. They've just been pumping for 3 months, right? There's like so many stocks are up 30, 40, 50, 100% this year, right? I'm not sure if that can maintain that speed for such a period of time without having a pullback. And the smartest money in the room, which is the bond market, they're all giving us a signal, and especially since it looks like inflation is actually coming in a bit higher. They're giving us signals now that the terminal rate, which is the rate that the Fed stops hiking rates at, is going to be higher than expected. And in my opinion, that's not priced in yet to the equities market. Now, equities and risk assets is usually the dumb money in the market, and the smartest traders in the world are usually trading the bond market. So it looks like potentially the people that trade equities are starting to catch up now to where the market is. In my opinion, it's sort of been deviated from reality of where inflation actually is, and it's a bit stickier than what people are expecting. So I wouldn't be surprised if this ends up moving into a downtrend now. So keep your eyes on this, keep your eyes on the DXY, keep your eyes on the yields as well, because if DXY, which I haven't looked at yet, I'll show you quickly. If DXY pushes into its uptrend, which is just broken out from this flag, and it looks like it's going to try and challenge this level at 105, right? If it breaks out of there, or, you know, even worse for risk assets, puts in some sort of an inverse head and shoulders or something like that, that will be also another trigger to watch out for equities dropping. And if equities dropping, that means risk assets are dropping, and they're going to bring down cryptos because they basically a beta asset to the risk market, right? So yeah, keep your eyes on ES. And if this ends up breaking down, which it looks like it is going to at the moment, then that will likely drag Bitcoin back down, and we can be looking to reaccumulate at the low. So this is my target. This is my map that I'm sort of looking for at the moment. It also, if we end up being more bullish than expected, come back down to this level at 21,300 and rally off there as well. So those are pretty much the two main paths I'm looking for at the moment. Come down, chop around sideways at the range lows, maybe put in some sort of price action like this over here, and then we rally out again. That would be really interesting to see. Just straight up for here, I'm not really seeing it at the moment, but of course, always could happen if, you know, they turn the up only algo on again, like they did down here. But at the moment, I'm not seeing that, especially with risk assets looking like they want to capitulate here and catch everybody that was pretty much long the top through here, getting way too excited over all the massive gains in stocks. So yeah, that's pretty much it from me, guys. Thanks a lot for tuning in, and we'll see you all in the next episode.